ETFs will make XRP's price go up significantly. Well, or will they? Everyone's wondering how a possible ETF announcement could affect XRP's price, and more importantly, why current ETFs are not really moving the price. And by the end of this video, you'll have a clear understanding of the difference between existing ETFs and the potential future ones that could drive XRP's price much higher. Most importantly, I'll share where we can expect the price to move to after the supply shock and the FOMO is triggered by these ETFs. How will ETFs affect XRP's price? That's the question that everyone's asking me right now. And that's why I created this video. I wanted to explain the ETFs we currently have that are not affecting the price and how spot ETFs create a completely different supply dynamic, that the combination of this with institutional demand and retail FOMO could create a supply shock that drives XRP's price to the highest levels that most people think are completely impossible. So everybody's talking about ETF approvals, but they don't understand the fundamental difference between what we have now and what's coming. Current XRP ETFs are futures ETFs, and what we're looking for are the coming spot ETFs. We already have the futures, right? They're already trading. We have 2 times long XXRP ETFs. And with all of them in total, I think we have about $240 million invested in these futures ETFs. So Volatility Shares launched their XRPI futures ETF in May of 2025 on NASDAQ. You got futures ETFs. Well, they don't actually buy the XRP. They have a rolling futures contracts. Okay. So there's no actual impact on XRP's supply because they never take possession of the underlying asset. We've talked to our partners that trade futures, and there's some situations where I want them to take possession of the underlying asset and they can't physically do it. So the difference here is spot ETFs are going to have to actually buy and accumulate the XRP. They're going to have to hold the tokens and back every share issued in the ratio that they are mandated in their S1. Okay. So futures ETFs really haven't moved the price for XRP, but they are a precursor for what's to come. The SEC wants futures markets in order and operation for at least 6 months before they allow the spot ETFs to be approved. So we need them, but they're not going to do a whole lot for the price in the meantime. We saw this for Bitcoin. Bitcoin futures were live for a long time, but when we got the spot ETFs for Bitcoin and we got these treasury companies for Bitcoin, that's when we saw the huge move, and it was at a high even before the halving in this last cycle. So fund managers buy futures contracts and not really these ETF tokens. And so that's why, again, it's not moving the price. Most futures contracts get rolled over before their expiration. And again, they're not taking the actual XRP. They're not taking delivery of it like you would for gold on the COMEX, which many people are doing right now because they don't believe all the gold is actually there. So even if they did take delivery, they would just sell it back, right? There's zero constraint on the XRP supply and the demand dynamics that would cause XRP to go up. Now, we have started to see some accumulation of XRP through TWAP and VWAP by these large institutions that have filed for these ETFs, these spot ETFs, but they haven't been approved yet. And we don't have huge demand from retail having that listed on NASDAQ or other exchanges to be able to get an allocation. We even have ETPs in other jurisdictions, but US are the largest capital markets. And again, because we've seen it with Bitcoin, we've seen it with ETH, I think it's going to also affect XRP's price substantially when these do get rolled out. So that's really the difference here. Spot ETFs have authorized participants that must buy the actual XRP from the exchanges or OTC desks or dark pools. And every dollar of inflows requires purchasing XRP tokens that get locked up. They're held in custody. They're with Coinbase or Anchorage or another custodian that the issuers of the ETFs are using. The ETF shares are backed in whatever ratio for the XRP holdings that they need. Some of these are as low as like 5 XRP per share, all the way up to like 50 XRP per share that they're going to be issuing. So this creates a permanent removal for this XRP from the circulating supply. Unless, you had a situation where a bunch of people divest and they have to sell their shares in the ETF, they would then sell, the XRP that they bought back onto the market. But as long as people are holding those ETF shares, that XRP is going to be removed from the circulating supply. So the same mechanics that contributed to Bitcoin's rise, though over a longer timeline, should be realized in a much shorter time frame for XRP. We've already seen the most aggressive move in liquidity and futures of any other asset that's been issued. It's up to $1 billion on the CME after just 3 months of trading. That's the fastest any asset has gotten to that level. And I don't think the ETFs are going to be any different. Okay. So there's currently actually more than 8 spot ETF applications pending with the SEC right now on their final decision for the approvals of these spot ETFs. And it's looking like somewhere between October 18th and the 25th of 2025 this year. Now, we did just have Franklin Templeton get punted to November. You got Bitwise, you got Grayscale, you got 21 Shares, you got Canary Capital, you got Wisdom Tree. All of these have filed applications for these spot ETFs. You got Polymarket at like a 94% approval rating at this point. They believe that the odds on it are very high that they're actually going to get approved. And again, with the DTCC listing the other day, I think that that's very accurate. Paul Adkins, also being the new SEC chair, has been seen as crypto friendly, very different than Gary Gensler, who we had with the previous administration. They're actually providing guidance around this stuff rather than regulation by enforcement. And so I do believe that they are going to approve a lot of these ETFs and create a real clear path along with the CFTC on how to get these things to market in a much faster manner. So this kind of takes me back to the futures. You got the CME, they launched the XRP futures in May of 2025, and this meets the SEC's requirements for the derivatives market. And those requirements might change in 2026. It might go to something like volume and total market cap for a digital asset before they're, and that would make things much faster, right? You wouldn't have to have 6 months of futures before you could approve the spot ETFs. So I think this dynamic might shift here. But right now, the SEC wants those 6 months of the futures market trading before they will allow, the spot ETFs to be approved. So let's get into the supply shock theory that most people are missing. Exchange available XRP inventory is significantly smaller than the total circulating supply. Coinbase is way down. Coinbase is down to like the last 100 million XRP, which seems like a lot. But over the last couple months here, that's down almost 90% from what they had. Institutional ETFs demand could require hundreds of millions of XRP for large inflows. Okay, so as there's a rotation out of maybe some of these other ETFs, Bitcoin into XRP or Hedera or Litecoin or Solana, a lot of these are looking like they're going to get approved at the same time. In the past, when we've seen Bitcoin dominance fall, there's been a rotation of that liquidity into altcoins. I think that could happen here again. And retail typically holds XRP long-term, so not actively trading it on exchanges. So all of these kind of culminating together are how we're going to get this supply shock. Price would need to rise significantly to incentivize retail to sell to these institutions. You probably bought your XRP at 20 cents, 30 cents, 50 cents, $1, $2, $3. Whatever it was, if you got a $10 XRP, a $25 XRP, $100 XRP, you're going to be a lot more incentivized to sell that onto the open market than you would be if it stays where it's at, right? A lot of people are here for that appreciation and to make some money. So the potential setup here for supply constraints is going to drive exponential price increases when this demand happens from these ETFs. You got a few people that have come out and said that they think there's going to be somewhere between $5 and $8 billion worth of inflows in the first 30 days, which is extreme, way more than Bitcoin. The timeline and catalysts are all converging for this to happen. You got ETF approvals expected in October based on SEC deadlines. You have the ending of the case, the final sign-off from the judge between the SEC and Ripple. Again, I think it's a formality at this point, but institutions are waiting on that. You've got potential major partnership announcements from Ripple, maybe even R3 and a few others, including SBI, that I think could drive the price and demand. You've also got ROUSD, the stablecoin, creating additional utility for XRP. And again, most of that's been issued on Ethereum at this point, but I do think over the long term, Ripple wants XRP to be successful. It's the neutral bridge asset. They hold a ton of it in their treasury. So the more mainstream adoption we can get for these EVM sidechain on the XRPL and issuing more ROUSD there, they're going to go to where the liquidity is. Okay, so until there's a ton of liquidity in XRP, it doesn't necessarily make sense to issue the majority of the ROUSD there. But as that moves from Ethereum over to XRP, I think you're going to see a huge shift and eventually much more ROUSD issued on the EVM sidechain for the XRPL versus the Ethereum mainnet or Polygon or some of these other networks. Now, you have central bank digital currencies piloting the XRPL right now in its infrastructure. You got Palau, Montenegro, Jordan, Georgia, just so many different ones. And these are smaller nations, right? Japan's really probably the largest one, in Brazil, that are looking at the XRPL to issue their CBDC. But I think you might have the euro. I think you might get the dollar. I think you might get the ruble. And many of these other large G7 nations issue their stablecoins and CBDCs on the XRPL. And I think that's what people are missing. They don't understand that when that happens, the volume of transactions is going to explode settling through XRP. So with all these multiple catalysts, it could create a simultaneous institutional and retail FOMO. If it's just what happens in crypto and in the stock market. When people see things going up, they pile in on top of it. People get emotional, right? And so as that happens, one, you're going to have retail selling, but you're also going to have all this other demand buying. And that buy pressure is what's going to push the price higher, especially with supply constraints. There's not as much available on exchanges as there's probably the least amount of XRP available on exchanges today than there has been ever in the history of XRP. The key insight is that Bitcoin's ETF approval in January of 2024 was just the beginning. The major price appreciation took nearly a full year to develop, reaching $100,000 in December of 2024. But I don't think it's going to take anywhere near that long for XRP. I think it's like a balloon that you're holding underwater, and when you let it go, it's going to skyrocket. So what are these mechanisms on how spot ETF money flows, and how does that make its way into XRP, revealing why this could create an unprecedented price appreciation event, okay? And what's the timeline around that? Could it be longer? Could it be shorter? So that's what we're going to get into in this part. So how do these spot ETFs actually work? Well, you have authorized participants that create an ETF and the shares by depositing XRP into their fund, okay? They must buy XRP on the open market when institutional demand exceeds the available inventory. So again, like they have this repository of XRP, they're able to issue the shares. When they have more outstanding shares than they have in the supply, based on the ratio that they're supposed to hold, they have to go out to the market. Large orders often are executed over time through TWAP or through an OTC market to minimize market impact, because they do want the best price for their shareholders, right? That's their fiduciary duty. So XRP has very small trading volume and liquidity compared to Bitcoin and Ethereum. And again, this is going to force institutions to potentially bid much higher prices for the sufficient amount of XRP in order to be able to be compliant with what they need to do. So let's learn from Bitcoin's ETF experience. All right, Bitcoin's ETF approval was in January 2024, and it led to an initial surge of $47,000 per token. It reached 73K by March of 2024, which was an all-time high, even before the halving, which happened in April, and then it consolidated through the summer before a major price breakout to over $100,000 came in December of 2024. Market liquidity opened up. It's almost 11 months after the ETF was originally launched, and multiple factors contributed to the ETF inflows, the halving, election results. And this shows that the ETF's impact develops over months, not necessarily weeks in the beginning. But again, same thing with futures. Bitcoin futures were around since 2017 before the ETFs were launched in early 2024. The Bitcoin futures were launched in early 2018. So almost 6 years before the spot ETFs were available. So I think everything with Bitcoin is going to take much longer than some of what's going to happen for, these other digital assets, including XRP. So let's talk about the supply constraints. Well, exchange inventory of readily available XRP is a fraction of the circulating supply. Conservative inflows estimate somewhere between, 2 to 4 billion in the first year. Again, we have those predictions that show somewhere of 5 to 8 billion potentially in the first 30 days. That's coming from JP Morgan and a few other more credible sources. So each billion in inflows requires significant XRP purchases at a prevailing market price. So what does that mean? Well, that's a lot of money moving into the market with not that much XRP available, basically, is what it comes down to. So limited exchange liquidity could amplify the price impact for these large institutional orders. So what's going to happen when the supply gets tight? Well, ETFs must continue to buy to meet their institutional demand, period. Like it's a spot ETF. They have to have it. So as prices rise, retail holders will be willing to sell the long-term positions. And again, it's going to have to be a high price because most retail, they're expecting these higher prices. So this creates a potential bidding war and competition between institutions for the available XRP. Retail FOMO could kick in is another piece of this. And if everybody piles in at once, you got South Korea and other jurisdictions that really love XRP, and they get behind that momentum when it's moving, which creates additional buying pressure. So the supply shortage could force significant price discovery as sellers demand a premium on their XRP. So if you're already in, you could be one of those sellers that's demanding a premium on their XRP when all of this transpires. Okay, so with all of these catalysts, you got ETF approval coinciding with major bank partnerships and announcements. You have enterprise adoption of XRP for payments and settlement once the price is high enough. You got institutional demand for CBDCs and the integrations for that going live potentially in November this year with ISO. And you could have institutional demand beyond just the normal ETFs because of the asset treasury companies. You got Arrington that's launching one of those. And I think other people will follow along and want to accumulate XRP in their treasury for their company. So along with that and retail FOMO, you have major announcements coming out that I think will happen after the lawsuit with Ripple and the SEC is finally signed off on by the judge. I think you could have Apple, Amazon, Google, and a ton of others that this campaign happens for them, which would be great for Ripple stock and also for the adoption of XRP. So let's talk about some realistic timelines. I don't want to be realistic here. I don't think it's going to be anything short of the perfect storm for XRP. And some people are like, well, you should hedge this, that, and the other. Look, I don't want to hedge. I think, if the ETFs, alone were to launch completely separate of all these other catalysts with the reverse carry trade and Tether's implications and the other side of this where there's a systemic event, probably a realistic price in that situation somewhere between $10 and $25 for XRP. Okay. But I think it's going to coincide with everything else. Like I've talked about for over a year and a half putting this together. I really do believe we're going to see a once in a lifetime crazy event that occurs during a systemic crisis that causes XRP's price to go to levels that most people are going to have a hard time comprehending because of their recollection and they can't reconcile market cap for a protocol versus a company. So I'm not going to hedge. I think this is going to happen. I have a public bet that XRP is going to be at least $750 by the end of the year. We'll see if I'm right or not. I am not Nostradamus. I don't have a crystal ball, even though I do have a crystal ball. It doesn't tell me anything. So I'm super bullish on it. I have bet a lot on it, and I could be wrong at the end of the day. And if I'm wrong, I'll say I'm wrong. But I think that with the macroeconomic components that are in place, along with these ETFs, the timing just seems too coincidental for me. Okay. So I think when we see BlackRock roll this out, which I do anticipate happening, along with these other people issuing spot ETFs, I think we could see prices, somewhere between 50 and $100 in a very short period of time and to potentially 4 digits not too long after that. So in closing, look, spot ETFs are a big deal. Hopefully you understand, what the difference is between futures ETFs and spot ETFs now that we've gone over the differences and why the spot ETFs really haven't affected price the way that a lot of people have hoped for, and the reason that we needed those in the futures market before we could get these spot ETFs that really will make a difference for the price. So if you got value from this, please like, subscribe, check the notification bell, and we'll see you guys on the next one.